Newmont's proposed takeover of Newcrest. Newmont is a portfolio holding, and the stock went down about 6% on that news. I think it's a screaming buy here. One, they're looking to pay $17 billion for Newmont, which they have. They're going to do in stock mostly for Newcrest, right? They're looking to buy Newcrest, which is one of the largest miners, right? Or the largest miner in Australia, gold producer, big copper producer as well. And the reason why I like Newmont, because the deal, they think Newcrest is going to, ask for a little bit more money. They already did. It was behind the scenes, and I don't know when they tried to purchase them, but this price apparently is like 7 to 10% higher or something like that than the price was. And I didn't give a time frame, but it could have been like a month ago or 6 months ago, whatever. But they said this is the second time that they came back. They might ask for a little bit more, but I'm not sure the deal will get done, right? Because you have Newcrest, which has great assets, long shelf life, again, huge copper producer, but shitty management, right? They're still looking for a CEO the past 3 months. The previous CEO left in December. He was there for 8 years, and he was bullying the shit out of people where he would humiliate employees if they didn't make their goals. So, that's probably why the company had record profits, but every employee was like seeing a shrink, right? So I'm not too sure if you're happy about that. Maybe if you're an investor, you might be happy with that. I don't know if that's defined success, but he came out with like this whole apology. He wound up leaving pretty much abruptly in December, I guess. For some reason, I didn't think he was going to leave. He made this big apology. Why apologize and then leave anyway? But so they don't have a CEO. So they have management, issues and stuff. And for Newmont, they have great fundamentals, but growth expected to slow over the next 12 months or so. But it's priced into the stock where it's being down. That's why I really like it. Nice dividend, but this is going to help the company significantly. Okay, they're saying it might be dilutive to earnings, right? Instead of being accretive right away, where you're making money off of it right away, where you're going to lose money off for a couple of years, not that much. Because if you look at gold companies, it's not like factories and Ford or whatever. Where you can cut costs and you have synergies and stuff like that. You have gold mines in different places. It's not like you can cut employees. You still need to develop. You still need to have trucks there. You still need to have separate people on site. It's not like, oh well, let's close that mine and then merge it into here. You can't do that with factories. You can. All right, we got 4 factories. Let's close 2 of them. All of our production comes from here now. Again, I make it pretty easy, but there's not a lot of synergies in some of these things. What it is for Newmont though, and why this is going to be fantastic for them. Well, one is if the deal doesn't go through at this price, Newcrest has to be careful because I don't know if anyone else is going to come up with this price. You could say Barrick. I'm not too sure if Barrick would do it though. That'll be not a merger of equals, but they have a smaller market cap than Newmont. But if Newmont's able to pull this off and buy Newcrest, listen to these numbers, guys. Newmont's going to increase their gold reserves by 60 million ounces. That's a 50% increase. They're going to increase their measured and inferred resources by 120 million, which Newcrest's M&I resources are greater, right? So they're going to increase by 150%. They're going to increase their copper revenue. Right now, it accounts for 3% of sales. They're going to account for more than 10% of sales. They're going to increase their sales of copper by 230%. 230%, which is huge. Copper's on fire. Cover that in a second. And the combined company is going to produce roughly 8 million ounces of gold production at an average all-in cost of $1,150. I mean, you talk about margins, talk about a great investment. This is it. This is great. They can go a little bit higher for it, but this is it. Now, why do I like Newmont? Because either they're going to get this deal done and maybe the stock goes a little bit lower because that's what happens when you acquire, you make a large acquisition. But if you're a believer in gold over the next 2-3 years of how big it's going to be, and I've bought so many companies like this that they'll have like one of the biggest acquisitions in their history, and you'll see the stock come down maybe 10 and 15%, and 2 years later it'll be up like 200%. I've made a lot of money in my career doing that with companies, just seeing that. Right? This whole balance, because everyone's like, quick, they want to know 1 year, it's going to be dilutive. I just told you the numbers. I mean, this is, it's Newmont and everybody else. I mean, you got Barrick, Agnico. I mean, they're not even in the ballpark of Newmont anymore. And not only that, the copper is huge. When you look at the bigger picture, I mean, it's difficult to add reserves in low-risk countries. And it's been like that way for decades. So if you look and this is Thompson, right? Thompson First Call, right? It's S&P that came up with this stat. It's fantastic. 341 major deposits discovered between 1990 and 2021. So we're looking at 30 years, basically. Only 28 of those 341 were found in the past decade. Of those 28, again, since 1990, they've only amounted to just 6% of the total gold discovered since 1990 for the past 30 years. That's how crazy it is and how difficult it is to find major gold deposits, especially in mine-friendly jurisdictions. More importantly, let's dig in a little bit. This is why I wanted to cover this subject today. Look at the recent deals that we've seen in gold. Newcrest Mining buying Return Resources. You have Agnico Eagle and Kirkland Lake Gold. That's a $10 billion merger. Kinross Gold's $1.4 billion acquisition of Great Bear Resources, which they say it's a junior, but it's a super high-grade project. It's a really special project, Great Bear Resources, right? So $1.4 billion. So you look at these deals, and for me, it makes you think that the junior miners could be in a lot of trouble. A lot of trouble. Because why would these companies go after the junior miners? And you can say, well, they might have this big discovery, and again, they're planting their flag in the ground. Everyone's like, cheering, okay, great, that's awesome. And they try to sell this project. They'll drill a couple of holes here or there, a few $1 million, whatever, and they try to sell these projects, increase that grade, increase that deposit as much as they can, make it look, rapid and just nice, present. And this way they'll get bought by the bigger guys. However, you're looking at 12 to 15 years by the time you put that stick in the ground and drill that first hole, just to see what's in the ground compared to when you're actually producing gold. So think about the costs associated with that. You are looking, the costs right now, these juniors are going to require tens, if not hundreds of millions in capital over the years to bring these projects to production. Not to mention the borrowing costs and financing now compared to last year. You know how much it costs? How difficult it is to raise money? It's not that easy anymore. It's insane. So when you're looking at this, unless it's a fantastic high-grade gold project with super low cost, which I don't think you're going to find anywhere, it makes you think like the juniors. And look, if prices in gold go up to 22, 23, 2400, the whole market's going to do well, and junior miners might outperform the bigger guys. But you could see how the bigger guys are positioning themselves. They're not going out. Like $17 billion is enough to buy like almost every freaking junior on the planet. And they're like, F you. We don't want that. This is what we want. We need producing. Producing assets have long lives, more than 10 years. And more importantly, you want to make sure that it's not just gold producing, but gold producers have lots of exposure to copper. Because copper prices, and man, you think the supply-demand imbalance for uranium is crazy? You should see copper. Prices have been surging for the past few months, and now as China closed. China's open now. Look out. But gold prices, I see gold go much higher this year, over 2,000. I think 2,200, 2,300 would not surprise me. Margins for companies like Kinross, Barrick, Newmont are going to explode higher as you're looking at their all-in costs around $1,100, $1,150. And they're already printing money at $1,800, $1,700 gold prices, right? They have dividends, cash flow, massive cash flow that they're generating. Again, the only thing that happened to these companies and why it wasn't so big is because those all-in sustainable costs were $900. And they were $1,000. Now they're like $1,100, $1,150 because the cost, oil, rubber, tires, metal. It's insane how much the costs have gone up to drill, to mine. And that's what's kept these guys from really going a lot higher. Because in a market where you're seeing, again, technology company, their margins on average are down 10% from last year over year. This current quarter compared to last quarter. Earnings are down tremendously, but margins are down 10%. These are companies that margins are getting higher and higher and higher. You're not seeing that a lot, right? Companies are starting to lose pricing power. But if you look at gold, as prices go higher, and now these guys finding ways to eliminate their costs and maybe, cut back on employees and lower costs and improve their cost structure. But then when you see that underlying commodity going higher and higher, which is likely with gold from here, a lot of people see gold over 2,000 this year. I don't see it at 1,500, wherever it is now at $1,800 level. But to me, that's a big story. That $17 billion bid's a big story. I want to see if that goes through. If Newmont get that deal done, great for them. Might have to go a little bit higher on it. But I'd be careful if I was Newcrest because I don't think anyone else is coming around the corner. And again, looking for a new CEO, the culture, the employees and stuff like that hasn't been too good over there. They better be careful. They better be careful because if Newmont calls their bluff and says, hey, you know what, I'm walking away, kind of like what Amazon did to AOC when she was like, oh, we don't want these tax credits or whatever. She didn't understand economics, that how much they were going to give to the community, Long Island City, and pay these, new employees. I think it was 25,000 new employees and stuff, and build this, home base in Long Island City, which is such a great area, man. Just, the melting pot, man. Just so many different nationalities, hard workers. I've lived there for a few years in Queens, and AOC was just like, she like pounded her chest. It was like, yeah, I beat Amazon. Amazon, like 2 seconds, like, all right, we'll go someplace else because there's 5 million places in the world that want this deal, that would take this deal in a heartbeat. She just didn't understand economics. Be careful with Newcrest because they push, and if Newmont walks away, you're going to see that stock really get hammered because I don't think anyone else is coming. I don't see Barrick coming. That would be a very big deal. Maybe. Maybe when the big metal miner producer, I'm not sure. We'll see. But definitely get some exposure to gold, especially now since gold stocks have really taken a beat in the past week. And holy cow, a lot of these names are down. I use the opportunity to buy in this pullback. It's a great opportunity if you have a 12, 24, 36-month time horizon. And it seems long from 12 to 36 months, but seriously, the next 2 years with gold, I think it's one of the areas that you could see clearly where the margins are going to go higher, where it just makes sense with all the government spending, with everything. People go into gold as a safe haven, as a store of value. Even the margins are good in this industry. As long as you're holding up above 16, 1700, which I see gold prices easily doing and likely going over 2,000, these companies are going to print money. The big names are going to have nice dividends. I mean, you've seen a lot of consolidation in the industry. I mean, this is an area that actually is not uncertain over the next couple of years. And that's why I like it. I think it's a great place to park some of your money and get exposure. And I do that on this pullback, especially Newmont. Newmont could come down a little bit more if that deal gets through. If that deal doesn't go through, you're going to see the price jump up, pretty much regain everything that's lost, which is down about 6% since they made that offer. Maybe it goes down a little more. But again, take a small position and add to it, hoping that it goes down even more. Because if this deal gets done, holy cow, Newmont's going to be a powerhouse